Hi, everyone. It's good to see you all here today. I'm Silvia. I'm a correspondent at CNBC, and it is my pleasure to welcome you to this panel where we're going to be looking at one of the biggest economic events as we start 2023, and that is, of course, China's reopening. So I have with me a very special panel. Let me introduce them to you. With me, first and foremost, I have Satish Shankar, regional partner, managing partner, I should say, for APAC at Bain & Company. We have as well Felix, Sutter, president for the Swiss-Chinese Chamber of Commerce. Milton Cheng, he's a global chair at Baker McKenzie. And Jonathan Krane, CEO of KraneShares. So thank you to the four of you for being here. They all have a very big expertise when it comes to China. So I'm very excited for this discussion. And actually, I would like to start with you, Jonathan, because this morning we actually had a chance to hear from the Vice Premier of China speaking here in Davos.
Yes.
He sounded very positive, but what did you make of his remarks?
Yeah, so it was great to have the Vice Premier Liu He speak here at Davos, and it was a very positive message. A lot of it had to do with China's economy getting back on track. And obviously everyone knows China's opening up now, and it's happening very quickly. And Liu He's message was, the commitment of China to get the economy back on track, reasonable growth this year, much better than last year, smooth supply chains, getting manufacturing back on track, and then also back to globalization. And he mentioned Belt and Road, and and focus on trade with many countries. So very positive message.
It's interesting because this is one single event, and yet there are so many little ramifications from China deciding to reopen its economy, sure. Isn't it? But before we dwell into some of these smaller themes within this event, I would like to ask you, Felix, what are the business side, what are they saying right now as China announced this reopening?
I mean, as a business, Swiss businesses in China, we're very happy. Because finally we could now, since January 8th, travel to China. That was not possible for almost 3 years. Very good news. Mm-hmm. So we can connect with our local business in China, understand what is the needs, discuss with the people face to face, things which not easy always when you only have online versions of communications. So in that regard, very, very good. Now, of course, we are 1 week ahead of Chinese New Year. So not much happened since January 8th and Chinese New Year. Mm-hmm. But we expect after Chinese New Year, 5th of February, after the Lantern Festival, that the big delegations will start from China and to China. Also, we see kind of that the peak of the epidemic will be February, March in China. It all depends how the travel goes during Chinese New Year. So all of that is exciting. We're observing, we're talking twice daily with Chinese counterparts to understand what is happening and also see how we can help.
The question that I have, though, is whether this is a delicate reopening, because there's concerns naturally about the immunization, whether the vaccines are strong enough. There's questions there about whether President Xi Jinping will stick to this announcement. So my question to you, Milton, perhaps, is whether do you think there's a chance here, a small risk perhaps, that China will actually reverse this announcement of a reopening?
I think that the risk is, as you say, small. Very happy to hear Jonathan remark about Vice Premier Liu He's commitment to the reopening. Mm-hmm. I would be surprised if there's a reversal. Certainly from what we're seeing on the ground with our clients and our team, a lot of projects that for the last couple of years went slow or put on hold are being revived, both inbound into China, upgrading factories, warehouses, coming to look at IP protection for investments into China. All those are being revived. We're also seeing a lot of sort of dusting off of projects for China investments outbound as well. So yes, I think as Felix says, there may be a little bit of a hump, where we see Chinese New Year, hopefully the COVID hump will pass, but people are already planning ahead for a lot of activity beyond that.
And Satish, what do you make of this? Do you also recognize that there's perhaps a small risk of a reversal, or are you also quite positive about what we're watching?
It's a good question, Silvia. We think that the risks are relatively small, as Milton is saying. Other countries have been through this, and sometimes, you take 2 steps forward, 1 step back. But stepping back, it's very clear, as Jonathan said, top down, there's a clear mandate to shift focus from COVID management to economic recovery, right? It's top down, and that's how China works, number one. Number two is, based on our analysis, our best guess is that within 6 months, just like the US, China Consumer Confidence Index will be up to the levels that it was pre-pandemic. And clearly, the recovery will not be even. There'll be some sectors that benefit. So you take consumer services, tourism is going to massively benefit. So even pre-Chinese New Year, there was a 540% increase in bookings relative to last year, right? So that's a dramatic increase. And one of the big beneficiaries is going to be Southeast Asia, and in particular Thailand, where we're expecting to see 7 to 9 million tourists from China into Thailand, which is about 80 to 90% of pre-pandemic levels. We're also we're expecting to see good growth in discretionary consumer categories like personal care, jewelry, so on and so forth, because as people go out, they start to invest in these categories. And then, as you know, the China government is making a big effort to revive the property sector. Mm-hmm. So with a lag, that'll benefit consumer durables as well. So overall, we feel this is an irreversible change, and it's good news for the world.
Let's look at the economic impact then, because of course one of the main areas we've been discussing pretty much since the pandemic was actually supply chains, how they were interrupted because of the pandemic. Jonathan, how are you looking at supply chains based on this decision from China? What sort of impact are you expecting there? Any sort of improvement?
Yeah, no, I think now that everyone will be coming back to work, I think that will help manufacturing. But China's been very focused on, over the last 5 years, on upgrading all of their manufacturing. So, they've actually done, even though they're still exporting a lot and manufacturing and exporting, I mean, they've really focused on more upgrading their own manufacturing and to be able to supply for the domestic consumption. So I think a key point, too, is over last year in 2022, the savings of Chinese citizens has doubled in 1 year. So I think it's now, there's $2 trillion equivalent, probably about 16 trillion RMB that's available, okay? And I think there's a pent-up demand because with zero COVID, no one could go out and shop and consume in ways they'd like to. So I think now now that COVID's peaked, mm-hmm. And they're now in that recovery mode leading into Chinese New Year. I mean, I got off the phone with a colleague a couple hours ago. It was in Shanghai, and he said, look, people are going to the cinemas, they're out shopping. He said traffic is at 2019 levels, subway usage is at 2019 levels. So I think it's coming back a lot faster than people understand. But getting back to manufacturing, I think that's good for the world. I think, look, the global economy is slowing down, so there still has to be demand there. But I think the supply chain issues will get fixed now.
I want to come to you, Felix, on this one, because we have seen also a couple of manufacturers deciding to move away from China for several reasons and investing in other Southeast Asia areas. And I was wondering whether do you think that now China has decided to reopen, whether some of that will actually come back to China?
See, I mean, you're more the expert in that supply chain strategy, but if the supply chain strategy is decided, it takes months, years to execute. I think in some areas, the train has left the station. Mm-hmm. However, depends what strategy we see. Do we see a China plus one or China plus two? So that means China plus two will be China for China. China plus one then is in Southeast Asia, and China plus two is in Eastern Europe or Middle Central America. So that is more or less not going to change on short notice. But what we see is, what you mentioned before, is they have upgraded. Mm-hmm. And there's a pent-up, there's a potential revenge spending here. But the question is that revenge spending coming, Or are the people, because we have a youth employment of 17 to 19% in China, is that more conservative, that is say, we want to keep our savings until we know how the economy is stabilized, our jobs are secure, and then start spending. So these are the uncertainties which you don't know yet. So that's why, is China back in Q3 or Q2? We don't know. We have to watch and monitor.
Satish, tell us what you're watching in this space. Are you seeing already an improvement when it comes to all those blockages that we watched when it came to supply chains during the pandemic?
We are expecting it, Silvia. Perhaps it's still early. Maybe in a few weeks we'll start to see improvement. I just want to build on what Felix said. To me, stepping back, I think supply chain resilience has become an important topic in recent times. So the fact that global companies are trying to diversify their supply chains and not put all their eggs in one basket is just sensible business, and it's going to happen. As Jonathan said, China is such an integral part of the global supply chain. And that's not going to change in decades because the infrastructure, the ecosystem, the capabilities are very hard to replicate at sensible costs elsewhere. It's also important, one of the beneficiaries of this has been Vietnam, clearly, of the China Plus One. But it's important to realize that Vietnam is 1/14 the economy or size of China as a country. So China is just too important. I do think some of the bottlenecks that we faced due to COVID will go away, and that will only improve things. The second thing I'd say is China continues to move up the stack because as their labor becomes more expensive and as they start to become a more industrialized economy, it's a natural motivation for them to move up the stack and go to higher value-added products.
So Milton, I want to ask you about inflation. Because obviously this has also been quite impactful in terms of inflation. I just wanted to get your thoughts on what sort of expectations do you have going forward now that China is reopening and we're actually seeing some improvement when it comes to supply chains?
Well, I'll leave the sort of economic analysis to people who are more expert than I am, but I can maybe comment on how we're seeing in the context of some of the M&A work that we do. Clearly, transactions have slowed down a little bit over the past few months, but it's gone through quite a strong wave, probably stronger than people expected initially for the last couple of years. But combination of inflation, the economic uncertainties, geopolitical uncertainties, I think transactions have slowed somewhat. But with China's reopening, I think certainly, at least from capital markets standpoint, we heard this morning from one of the panels as well, there's a queue of companies waiting to list in Hong Kong. There is not just pent-up demand at the consumer level, pent-up demand at the capital, public equity capital raising as well. I think we will see some of that. Even with the slowdown in M&A, there's still, I think most people are not completely shying away from it. There will be people with dry powder that are looking for good bargains. I think people will be doing deals so now that we can travel again with more due diligence than perhaps was the case over the last couple of years.
Yes.
And this is why it's also important to break it down in different sectors. You're just explaining some of the dynamics there. But from an investment perspective, Jonathan, what sort of sectors are you expecting to benefit the most? I mean, Satish already hinted to some of that, but what are you excited the most when you're looking at China?
Sure. So we kind of break it down into, first of all, we believe 2023 is the year of the consumer in China. Okay, 1.4 billion consumers, and I think the world's going to discover the power of that. But we also break it down thematically and sort of we look at it, China's becoming wealthier, greener, and healthier. Okay, on the wealthier side, that's consumption. But then how do a lot of people in China consume? They do it through internet and technology. So really the China internet names, we all know the Alibabas and Tencents and Meituans, that's really the consumption engine of China is happening through those technology names. So we're a big believer in China internet and the consumer play, and then healthcare. We see health tech and everything around healthcare as a good theme. And then the greener theme, which is everything to do with environmental. And there's so much government policy behind that and and investment going in there. Look at how electric vehicles did last year in China. I think, over 6 million electric vehicles. It's over 50% of the global market, and that's selling into a 25 million auto market a year. So, assume that goes 100% eventually EV over, the next 10 to 15 years. So huge potential around the future mobility and electric vehicles, and then wind, solar. Those are those three buckets, but then all the themes that come off of those.
Sylvia, if I can just build off of, while we're on the investor topic, I think it's also worth looking at the investors from types of investors. So as Milton was pointing out, public markets have corrected. All the stock exchanges in China and Hong Kong are up. In fact, the Golden Dragon NASDAQ index is up 70% since its lows in late October. So clearly, public markets have recognized that China is on a strong recovery path. As Jonathan correctly says, it's one of the best domestic consumption stories in the world, bar none, right? So that's important. Private equity was down upwards of 40% last year, so it was a challenging time for private equity, partly driven by the fact that going on the ground, doing diligences, et cetera, was challenging, but also just there was sufficient uncertainty around when the opening would happen that people were a bit gun-shy. And it was also reflective of the global environment for private equity. We're hearing from our clients that this is going to gradually come back, and exactly driven by what Jonathan is describing, which is consumer themes, but also the easing of the regulatory pressure on some of the sectors in the China economy. So that's private equity. We've also looked at some studies with the American Chamber of Commerce as well as the European Chamber of Business. And there is a slightly different, for strategic investors, there's a slightly different viewpoint from Europe versus US. So in the US, I have to say the medium to long-term sentiment is still a little guarded. So more than 50% of US executives surveyed, or executives of US multinationals surveyed in China, said that headquarters sentiment on China over the last 3 years has worsened, which is not a surprise. Equally, only 18% say that China is the number one international market for them, which was, that number was 27% 2 years ago, right? So there's some rebuilding to be done. Europe is different. More than 60% of European executives or executives of European MNCs in China say that China is a massive priority and they're going to increase their levels of investment. But 50% also say that the operating environment has been very challenging over the last 3 years. So one of the things that the government will no doubt focus on is improving the operating environment.
And actually, that's an interesting comment because I cover European politics, and I hear a lot of European officials talking about how their wish is to ask Chinese authorities to make things easier for European businesses. And given this perspective, Felix, perhaps you can enlighten us a little bit on that. Have you actually noticed any sort of improvement on the ground when it comes to regulation in China?
I think regulation in China has not changed. The viewpoint that China sees that regulation is something which they can control became more self-assured in the past few years, so that will stay. But what I see now is the opportunity with the opening up, that a lot of face-to-face conversations can take place. And if you have face-to-face conversations, of course you have the online time. But if the meetings are not done, or are over or before, you have communication, you exchange ideas, and you eliminate a lot of misunderstandings. If you have only online meetings, the misunderstandings stay. So now I can see a lot of opportunities to avoid misunderstandings, to erase misunderstandings. What do you really mean by that? Oh, sorry, I haven't meant it by that wording. So this is helping now. So this is where these interactions of these delegations are so crucial now, the next few months, to avoid these misunderstandings and to start changing the viewpoints of politicians, of regulators, because the regulators in China couldn't compare with a European regulator what their actual intent was behind. So all this will become more easy in the next few weeks and months.
And that's what I would like to raise with you, Milton, because trade is a very important part of the global economy, and now we're watching China reopening. In terms of the next, say, 3 to 6 months, what sort of expectations do you have on the trade front?
I think based on what we're hearing and seeing from our clients, the trajectory, I think, is clearly going to be positive. As we've already talked about today, initially for the next few weeks, while the dust settles a little bit on the opening, same as happened in all the other countries that went to the economic management route, as Satish was saying, rather than COVID management. But after that, I think that trade and investment will increase necessarily because of the size of the Chinese market, because of the size of Chinese capital being exported that's now being able to be released again. Coming back to a point we mentioned earlier, I don't think there's going to be too much of a shift back of manufacturing back to China. Rather, the growth will happen in different ways. But a lot of our clients already have made the decisions on diversifying their supply chains. They're not going to reverse that. These things are multi-year commitments, but they will look again at their Chinese operations as something that now is accessible and is much easier to manage than has been the case over the last 2 years.
All of this is so interesting, and when you try to put everything together, at the moment when you look at trade, for instance, there's a lot of tension between the Europeans and the Americans when it comes to the US Inflation Reduction Act. Earlier this morning, when von der Leyen, the President of the European Commission, was speaking, she also made quite strong comments against China, saying that the Commission should indeed go ahead and open investigations if they find that there's malpractice from their side. All of this to say that how do you expect politics to play a role in trade? Do you actually recognize that there's been some protectionism, or do you think that politics will actually try to ease these trade tensions globally?
I think certainly the experience of the last few years has been that there has been protectionism. Whether you do the stick approach or the carrot approach with like the IRA, I don't think anyone denies that. I think from our perspective, we acknowledge and accept that there will be at different times, different value systems driving policies in different markets and in different countries. But from a Bain McKenzie perspective, we are fundamentally globalists at our core. Being the global firm that we are, we see ourselves as a connector of businesses across cultures and all that. And protectionist doesn't mean isolationist, right? So the United States will continue to have its friends, other business partners, where China was one very big business partner before and is less so now. It has other partners. The same goes with China. So the need for business connections and all that will still be there. And we see ourselves playing a role doing that, not only in helping to build bridges across markets and cultures, but also providing, the other phenomenon that we see these days is things are much more hyper-local. You need the people on the ground to tell you what's happening. And if there's one big lesson COVID taught us, is just how the implications affect different markets, different cultures, different places differently.
Sure. There's one sector, though, that we haven't spoken about yet. And I'm actually quite surprised that has not been the case, which is energy. Because obviously China reopening also impacts quite a lot the energy sector. And from a European perspective, there has been a concern, for instance, that now China is reopening, they will be also consuming and needing more energy. So on this point, Satish, what are your expectations when it comes to the energy sector overall? What does the Chinese reopening actually mean for the sector?
Yeah, there is, I think, Silvia, you're bang on. I do think China's opening and therefore increase in the consumption of global energy could cause some inflation, right? There's no doubt that that is a risk. And we have to see to what extent that actually plays out. There are obviously various other factors that go into it. But as we think about some of the risks involved in just the global economy, that is definitely one of them.
Jonathan, do you agree?
Yeah, I mean, on energy, I mean, I think this opening up is going to be less commodity driven than maybe coming out of the financial crisis, where a lot of it was led by infrastructure. But I still think look at with just travel and that has consequences on energy and just China opening up with just how large the economy is there. So it's to be seen. I don't think it's going to affect the opening up. I don't think you're going to see it immediately. If there's ever repercussions or effects from it, I think it's like more 9 to 12 months later.
Well, one other thing I was saying, when we what we're hoping to see, especially with China's COP27 commitments and so on, is that Whereas Belt and Road 1.0 was a lot of it was energy infrastructure, fossil fuel energy. Belt and Road 2.0, when it happens, and it will be much more on renewables and on
like a green belt and road. Yeah, that's right.
Yeah, go ahead, Felix.
Interesting topic, because I'm tomorrow moderating a topic on energy, a panel. So I see with the consumer coming back in China, with the companies going back to normal in China, we're going to energy levels in 2019. Yes, there will be energy savings, but they will be not in the 20-30%. So Chinese energy needs and raw material needs will compete with the European needs, the global needs. So I see what we see in inflation relaxation right now. We will see more pressure on inflation coming in Q3. The question is then, so what is then and then for me, I'd make a link back to the consumer. So if the inflation comes back, where does the middle income layer in Europe get the products? How do they maintain the lifestyle with inflation? With products from China. So I see a big demand for Chinese products for the people in Europe which have 8-10% inflation because they want to maintain their lifestyle. And only China can produce it at prices they can maintain. So I see there a little political relaxation, because if the politicians realize that their election, their voters can only maintain the lifestyle by products from China, they will find a way to kind of communicate, to get in dialogue. But that's kind of, for me, a little bit how the whole thing will develop after Q3 2023.
It's interlinked. Just to go back on the point of inflation, Jonathan, what sort of expectations do you have for the remainder of the year? Are you also of the opinion that global growth will pick up, inflation?
Yeah. So China has a different dynamic than the rest of the world right now. In 2020, in 2021, when the rest of the world was putting out stimulus, trillions of dollars of stimulus, China didn't. Yeah. Okay, so they have a lot of dry powder today. So I think in 2020 they had 2% GDP, 2021 8%, 2023 looks like closer to 3%, but they haven't, and now they're opening up. So they're sort of their foundation right now in opening up is they're cutting interest rates, so they're easing right now while the rest of the world is raising rates. They have a lot of dry powder, so you're going to see a lot of stimulus. You're already seeing it. But they want that consumer, the domestic consumption to really drive the economy, and they have that dry powder, which I think is important, and it's in a low inflation environment. So I think there's a lot of advantages that is happening in China right now compared to the rest of the world.
And let's look at the Belt and Road Initiative 2.0. What sort of timeline do you expect on that one, Milton? Do you think this is actually going to happen in the short term, given that the climate change is an emergency, or do you think this will actually drag for quite a long time?
Need a crystal ball to know exactly when it will start, but it will be part of the program. I think the Belt and Road we're expecting will resurface. Maybe after this initial stabilization of the economy and reviving the consumer sector starts up as well. So, yes.
And Satish, do you think there's actually quite a lot of willingness from the Chinese authorities to go ahead with this version of the Belt and Road Initiative?
Yeah, Silvia, I think even beyond Belt and Road, I do think Chinese companies are hungry to build a global footprint, right? So you know that Southeast Asia has been a big beneficiary with a number of world-leading Chinese companies setting up Southeast Asia operations, doing a lot of M&A. I think after 3 years, somewhat of a hiatus, they are going to be back in full earnest, doing deals across the region. Clearly, the bar to do deals in certain sectors, more sensitive sectors, is higher. But there's a whole host of non-controversial consumer sectors where I do think you're going to see more deal activity driven by Chinese companies that are looking to be global champions. Yeah. And I think Southeast Asia in particular stands to be quite a beneficiary as a result of this.
Yeah. Do you also have the same feeling, Felix?
I have the same feeling. This kind of integration of that region which be much stronger. And Belt and Road is just one element of that. And actually, if I would be the Chinese government, I would host the Belt and Road conference in spring 2023, because that kickstarts the whole moment, everyone comes back, etc. And that would be the momentum which I would not be surprised if that happens. I don't know, but it would be no surprise. So in that regard, Belt and Road, regional integration, the whole ASEAN kind of restart as well. Now I see a lot of potential there.
And do you think there is also a willingness from governments in other parts of the world to accept this importance of Belt and Road for China?
The thing is, you have to deal with it. Just to put your head in the sand doesn't help. You have to interact with it. You have to, if you're part of the party, you can shape where it goes. Just abstain and not part of it doesn't work. So you have to be involved in it. It's like a dialogue. You can disagree, but you have a dialogue.
I comment. I think every country would want to be part of Belt and Road. I mean, you have massive investment coming in, infrastructure, create jobs, but it also gives you an opportunity to partner with China, and all your companies within your country can then have access to 1.4 billion consumers. I mean, it's a massive win-win opportunity. And with China, one of their big initiatives is globalization. It allows all their companies to go global, and they'll invest in that. And that's part of what Belt and Road is, trade routes and infrastructure. But that infrastructure helps those local countries, and then it allows those countries and their companies to partner back to China.
Felix, yes.
I think one word of caution I have. Look, in the first year from COVID, we pressed the pause button, ready to go on right away. I think now many companies, but also governments, have pressed the stop button.
Sure.
And now to restart again, it's not the same as pressing the pause button again. So we need more efforts to restart again.
Sure.
I think that is something which, I'm not sure on the China side, that is really understood. That is a stop button press, not a pause button. But that's something which I can see misalignment, expectations, etc., which need to be done.
Silvia, if I may, I think an important point to note here is, for a large economy like China, their international presence is still fledgling, still nascent compared to the US. Look at the amount of business that the US multinationals do outside the US. Look at the amount of business European multinationals do outside. So it is only, so Belt and Road is only one part of it. There's also, which is building infrastructure. Who knows what the next version is, but it's important to note that I think there's going to be an inexorable increase in Chinese companies that have world-class capabilities, indulging in M&A, setting up organic operations in many countries around the world. And I think that's a secular trend for the next 2 decades. And I think that should be the focus. And it's inevitable because of China's sheer clout, sophistication, IP, so on and so forth.
And actually, I'm just keeping an eye on the time because there's still 2 sectors that I want to discuss with you, which is obviously tech. China aiming to become such a global power when it comes to the tech sector. And then we've also seen several issues when it comes to the property market. So perhaps if we start with tech, what sort of expectations do you have here for the next couple of years? Now that China has reopened, there's of course tensions with the United States. What's the role of the tech sector for China going forward?
I think China's tech sector is hugely important. As you know, China is making very big investments, particularly in semiconductors, to develop a degree of self-reliance. 100% self-reliance in globally related supply chains is not possible, and they seem to be making progress. I think the big change that's happening is we're going from a unipolar world to a bipolar or multipolar world. And that will also potentially have implications on tech, right? Especially, the more high tech like semiconductors. And, the China proposition is compelling in many markets, right, in terms of price value. And so you could end up with 2 systems, a little bit like in the, GSM days where there were multiple systems. You go to Korea, or Japan, you couldn't use your phone. You needed to have a separate line. So I do think that's unfortunate. That does add cost to customers because the global scale of one standard is hugely simplifying, reduces costs, etc. The fact is also that China companies will be heavily scrutinized, and it will be very difficult for them to do deals overseas in tech. I think they'll also potentially be they will be prevented from participating in certain parts of the tech sector because of this rivalry. So that's inevitable. But I think we'll end up with a bipolar world with 2 parallel systems in certain aspects of tech.
Jonathan, as an investor, I want to get your thoughts on this one. How are you looking at these tensions, US versus China, in the tech space? And do they make you concerned when you're looking to invest?
Yeah, so when we invest in China, we're investing in companies that are actually, their market is China. So it's not like, the global geopolitics comes into play so much. Definitely, there's U.S.-China tensions that drive down the stock prices of these companies sometimes, which actually is what happened last year. And I think the same things that kind of drove down the market last year are actually going to be the drivers that allow China to outperform. And that has to do with a lot of it was tension between U.S. and China. The whole PCOB delistings, I think that's going to get announced where that's going to go away. They're going to come to a deal very soon. You had, so anyhow, when we look at technology, obviously, as a big future, especially as China's upgrading technology across all their industries. And a lot of it is that's going to be their global advantage because they have to scale. Okay, if they have advanced technology and then they scale their platforms because of 1.4 billion people, the price comes down and then they have they're very competitive globally. So you look at Shenzhen. I think that becomes the one of, they call it the technology capital of the world. And I think that, there'll be a lot of investment there. But look, there's still, semiconductors is part of the U.S.-China tension. And, China today, I think, can only supply 15% of the demand they have in their own country. So that whole industry, that's an opportunity to grow that industry. And I think I saw some stat that China bought more semiconductor chips than oil last year, actually. Wow. Just to show where technology is moving. I think through that upgrading of a technology, the consumer has more trust in their own products. Mm-hmm. I think that's important too, and there'll be a shift to buying more and more domestic, especially in the luxury segment. Mm-hmm.
Milton, are you expecting any sort of surge when it comes to deal making in this space?
Maybe I just pick up on one point you mentioned about stop buttons and pause buttons. Because on technology, the other thing that we're watching closely and actually very happy now with the reopening is the Greater Bay Area. You mentioned Shenzhen and it triggered my memory. Being from Hong Kong, that's right across the border. And the whole Greater Bay Area development project is very tech-based. And I think during the pandemic, the pause button was pressed. That was never a stop button and won't be. And when that unpause happens, I think the benefits, not just for that region, not just for the Pearl River Delta, also for Hong Kong, also for all of the other partners that China has around the world on technology-related investments and capital will pick up. So yes, deal making. So coming back to your question, on deal making, yes, I think already, as I mentioned earlier, we're seeing revival of projects and a number of them are in the tech sector. It is actually one of the sectors that we're seeing has been quite resilient through the, in fact, actually might have been enhanced because of everyone's moving to remote working and all that. But it's been very strong during the pandemic years. And with the reopening, we actually do see that picking up even more.
Felix, what sort of expectations businesses have when it comes to when the politics get in the way of doing business in the tech space? And perhaps you can already enlighten us a little bit more about expectations also for the property market and what might happen in China there.
So I believe that what we observe is the government focus on tech is now less than it was 6 months ago, 12 months ago. We believe also that, you said before, this dual world of technology that already exists if you're just thinking about how the access to the websites in China and here is, etc. So they will continue. I see, as you mentioned before, Shenzhen as a power plant, power base, a hub for innovation, and that will trigger a lot of things because many tech companies are relying on their Chinese partners already. And I think that is something which you cannot go out without. Mm-hmm. The question is, who is coming up new? Is Tencent and Amazon and Alibaba the dominant players going forward, or who's coming up new? What happened with this Tok Top, Skype Dance, etc.? Who is else coming up? That's interesting to observe. And of course, as more players you have, as more competitive it has, as better is for the economy because it's faster. Coming to the real estate, we have to understand that for Chinese family to save money, you have the bank account, you have the Chinese shares in Shanghai, and you have the real estate. So it is a very important element. So the prices of the real estate cannot drop in China. So this coming back, this sorting out, these challenges they had in the real estate market, the government is very much focused on. What is the silver bullet? I don't know. But there will be policies there which make sure that these real estate markets will come back because it plays a very important element in the saving strategy of the Chinese citizens.
It's part of their culture in a way. Satish, what are your expectations for that market in specific? What sort of evidence are you gathering so far on that front?
I'd say I'm not an expert on the property market, but I'd just say I'd agree with Felix that the Chinese government realizes that it's such an integral part of the economy that if China is to have a good year in 2023 and beyond and have a degree of economic stability, the market cannot be disrupted. So I think they've moved away from very excessive regulation to more sensible and more manageable regulation, which ensures that you don't have property bubbles all over the place and preserves the asset value of property because it's such an important part of savings. And I think that augurs very well because it's such an important part of the economy and it pulls along so many other industries with it, construction, consumer durables, etc., as I was saying. So we're reasonably bullish that the regulatory sentiment there will be very sensible and will be pro-business.
We don't have too much time left, but I want to get from all of you a couple of thoughts about your expectations overall for China over the next 12 months. This is in a way a moment where it's a bit of a reawakening of the Chinese economy as it's welcoming people again, allowing people to travel. What are your expectations, Jonathan, as you look at the next 12 months?
Sure. So from an investor standpoint, I think China outperforms the rest of the world this year. I just think there's a great opening up story. The consumer's back. China's back on track. So I think you're just going to hear a lot of positive news and a lot of stimulus from the government, a lot of support. So I think the next 12 months will be very positive in China.
Milton.
I echo that. I think, as we've said, perhaps in the first 1 or 2 months, while people are waiting to see what happens with Chinese New Year and the mass exodus of people traveling. But I think certainly what we're seeing is people are already planning for the increase in investments, increase in deal activity, investments in because of the big consumer base and investments out because of a lot of pent-up dry powder. So I think we're also optimistic for the next 12 months.
Felix.
For me, the keywords are recalibration, normalization, and observing what is the Chinese government doing with the new formation. We are waiting the 2 conferences in March. What is the new government doing, Xi Jinping's new team? What is the 5-year plan bringing? The 5-year plan is the roadmap for the next few years. We have seen already some information about that certain companies cannot raise capital in China because they have to be aligned with the 5-year plan. How much of that is coming through? So this is a recalibration, normalization, which I would like to observe. And 2023 will be a really fascinating year for every China observer.
Satish, your thoughts?
Thank you, Silvia. I completely agree with my fellow panelists. I'd start with 1, China on a secular basis is a very compelling domestic consumption story. 2, there's no doubt that China's reopening is going to be a big fillip for the world, which needs it, given the economies are stuttering a bit. 3, as an investor or a corporate looking to build a business in China, people need to do 3 things. 1 is relearn. The fact is China has changed quite dramatically over the last 3 years. And so executives, investors need to go spend time on the ground, understand at a granular level, as Felix is saying, how have the individual sectors changed, and therefore how do they respond? So number 1. Second is rebuild confidence in the investment story. And the fact is some sectors have been quite badly hit. Tech was one of them that we spoke about. And there are some, political implications in some sectors. So there is a need to rebuild confidence because you're putting in large sums of money to work, and you need to ensure that everybody in the organization is feeling confident that this is going to play out. And the third one is recommit. China is never an easy environment to operate in. It requires world-class capabilities and really long-term commitment. There's a need for some scenario planning, but so I'd just end by saying relearn, rebuild confidence, and recommit.
What a positive feeling, so bullish. Thank you so much for your comments. I have to say, it's quite a big difference from the mood that I often face in Brussels when reporting on European politics. A lot more positivity here. Thank you so much. Thank you also to you for joining us here, and I hope to see you soon.